All right, guys, we're going to do a recap for the trade activity this day, this last day of March 2020. This is the 31st, not the 30th, but the 31st day of March. And we're going to talk about what we did in the TradeLAB segment today at thetradingroom.com. So if you're looking for a new way to trade, look no further. Let me share with you the results that we had today. And you are looking at the Nasdaq. No, I did not trade the Nasdaq, but it's worthy of looking at and talking about because, man, did it have a bull breakout. And speaking of bull breakouts, the top green line there, that's the bull level. The bottom one is the bear. And that white dashed line, that would be the low of the day. And that top white line, that is the high of the day, which literally is being tested in real time as I cut this video. This recording. So you see those red dots? Those are retracement signals. That's part of the RQOBOS, overbought, oversold indicator. The yellow dots are signs of a overbought market. And then you have these red ones, which are going to be a sign of a retracement. Now, it did not retrace on that one. It did not retrace on that one. And you can see here, very little retracement coming. This thing is just like a mad bull. But I like to use those not only for entry opportunities as we get closer to the level, Did I mention as we get closer to the level? That's when I like to get short. But in this case, I like to use these as an indicator. Hey, you know what? This thing might be potentially hitting the ceiling and coming back down. So if you have any longs, start locking in profits. Okay? So you use it as an exit measure or a trailing stop measure, if you will. Now, these white bubbles that I have down here, these were entry opportunities. And right there is what I want to focus on. So I'll just take that one off for now. We were closing on the moving average, the blue line. And that's a qualification for a trend-following trade. Well, since we're in the bull zone, that's a trend-following trade. You get long on the next one, and you'd have a stop below the lower band. This is part of the turbo scalp strategy. Now, just put this in perspective, guys. If you were using the moving average as a trailing stop indicator, you're still in this trade. Okay, so talk about a mammoth move here. And if you're talking about the points on this trade, the entry roughly in the ballpark is 78.36 up to 79.66. It's like, I can't even do the math. That's like 130 points. So multiply 20 times 130 points. It's mammoth. It's a huge move. But I didn't trade that market today. I traded another one that's the cousin, and that cousin is called the Dow. Okay? Sentiment down here, see the yellow turning to blue? The yellow is a sign of a mixed sentiment, and the blue is a sign of conflict. So we actually went from mixed to conflict. You can see that I took a short originally inside of the neutral trade zone in between the bull and the bear, and I got stopped out break even. And then this thing started to break up above the moving average. I was going to take it. I didn't. I avoided it. And I waited for the upper band to break, and that's exactly what took place. And you can see there I have a qualifying condition on the upper band, and that's where I got long the Dow. And then when I started to see those retracement and overbought signals on the Nasdaq, the cousin to this market, that's when I started to bring the stop up and start to lock in profit. And now you can see the retracement, exactly what is taking place. It is in fact retracing right now, getting closer to where I got out. All right, so that was those are the two trades I did in the Dow. I also did one trade over here in the crude oil. Yeah, took a long. I was trying to buy it back on a retracement. Speaking of retracements, when you're in the bear zone, they're going to be green. So you see it there? And it did retrace. It almost went up, and I was looking for it to get into the neutral trade zone or to that moving average, and never did. So I ended up taking a very small loss, I think of about 8 ticks. And then this market has been just really consolidating right underneath the bear level ever since. So the three trades today, 2 in the Dow, 1 in the crude, Took 44 minutes for me to get my profit target, and there are the 3 trades: a loss of 80, a small loss of 10, and that Dow trade, a profit of 620. That nets me $530 with an average time in the market less than 10 minutes, 7.9, call it 8 minutes to be exact, for each one of those trades, especially that Dow. It didn't last very long, but man, it was a nice payoff. So you want to learn how to trade using the logic that I apply to all these trades. When I say logic, I'm talking sentiment, trend, leading and lagging markets, looking at the RQ Tech, which is a huge crutch. Helps me identify what's leading, what's lagging, where the consistencies are. This is all part of the logic. And of course, the zones help me, the levels help me to understand the location where there's high probability, low probability. It's all here at thetradingroom.com. Why don't you go sign up for a 2-week trial? It's easy to do. Go over to thetradingroom.com, fill in your name, watch a video, check out some performance, check out some of the indicators, the technology, and more videos just like this one. And that is a wrap, not only for the month, but for the year. But before I let you go, since it's the end of the month, we got to talk about performance. Here we go. This is the performance for the month of March. It's important that you guys can see what the numbers look like. So almost 10 grand for the month. This is on I used to say 10,000. I have to say 15,000 because the margin requirements went up about 4 weeks ago. So on a $15,000 account, 9,500. This is before your round turn commission. And for the year, guys, here we go. 16,000. 16,000. And of course, that makes the graphs look nice and nifty, as they should be. There's your results. That's the equity curve for the year. Here's what I like to do, though, guys. Do you guys remember February 17th? Because you should. February 17th is where things really started to slide. This is when COVID-19 was up front and center. Here's the results from the 17th of March to today. There you go. That's 11,357. So when we say, what are you doing and how are you trading these markets? You're looking at it. And of course, the one I'm most proud of is going to be when I look at performance week by week. So I'm going to put that up here for you right now. Weekly net profit. Last week when we ended Friday, I almost beat a few weeks back when I had a tremendous best week of the year. But you can see 1, 2, 3, 4. 2 of the last 4 weeks. 2 of the last 4 weeks have been absolutely on fire. Almost $5,000 between those 2 weeks alone. And of course, this last bar is just accounting Monday and Tuesday. So learn to trade through the volatility. We need the volatility. We welcome the volatility. Been doing this for the last 20 years. And hope you guys can join me tomorrow morning as we do it all over again. Thanks for listening.